Hi everyone, welcome back to our channel. I'm Ben and he's Ben and we are from CapStacked. In today's video, we are diving into an upcoming new launch, Pinery Residences. We'll walk through the key details of the project, the unit mix, our estimated price metrics, so that you can get a clearer sense of the pricing and positioning of this new development. And to keep it balanced, we also share 3 reasons why we love Pinery Residences and 3 reasons why we might consider Pinery Residences, so you decide whether it fits your needs or not. Okay, so let's start with the basics of this development. Pinery Residences is a joint venture by Hoi Hup and Sunway, two developers with a strong track record in Singapore's private residential market. The project is located along Tampines Street 94. What makes it particularly interesting is that it's planned as a mixed-use development, which means it has the residential unit at the same time as well as commercial units, right? So in terms of tenure, the project will have about 94 years of balance lease left upon completion in 2030, which is actually one of the longer leaseholds in the surrounding area. For buyers comparing in the neighborhood, this is actually something worth noting. Okay, so let's talk about the buildings itself. Pinary will consist of 6 residential blocks, each rising 14 stories high, and the height is fairly consistent with the surrounding environment, considering that many nearby HDBs are of similar height as well, so the overall skyline should feel quite balanced in the neighborhood itself. Moving on to the development size, Pinery Residences will have 588 units in total. In our new launch playbook, this actually falls into what we consider as the gold standard. For drivers, parking is an important point, so this car park will provide 474 lots, which are actually quite a healthy provision if you look at it right here. If you're a car owner, there's a high probability that you'll be able to secure your lots without too much concern. One of the biggest highlights is the connectivity in this area, right? So residents will enjoy a fully sheltered underground pedestrian link that connects directly to Tampines West MRT station. This means that rain or shine, you'll be able to get to the MRT regardless. And finally, on the commercial component, the developer will build around a 120,000 square foot retail mall, housing about 60 commercial units, and some anchor tenants expected include FairPrice, Kopitiam, a Mulberry Learning Center as well. So one of the key highlights here is connectivity. Right, so the development, as you can see from the map, is actually a short walk to Tampines West MRT. And this is on the downtown line itself. So from here, they enjoy direct MRT access to downtown line interchange station like McPherson, Chinatown, and also Bugis, making commuting to the city very easy, right? For families, the location is actually especially attractive in this area. So if you look at the map as well, we are within walking distance to St. Hilda's Primary School, and it is a popular school not only in Tampines but in the whole of Singapore. Temasek Poly is also nearby, and it's very convenient for both students and staff. Other amenities like Safra is also within walking distance. Okay, so we added some photos right here. You can see that in Tampines town itself, there are also other amenities that you have access to, like Tampines Hub, the Tampines Round Market, also Bedok Reservoir for green spaces. And of course, for all the malls, you are just one stop away to Tampines Mall, Century Square, and Tampines 1. About the developer, we have Hoi Hup and Sunway, and as you can see, they are reputable developers here. Their recent projects include Alta, Nava, Continuum, and Autoplace, just to name a few. Alright, so we also look at the quality housing portals when we look at developers. So in the quality housing portal, the concourse banding for 2 of the developers are both in the band 2. So on a scale of 1 being the highest quality and 6 being the lower quality, they are in band 2, which means they are pretty good and reputable developers here. And you can find out more why the banding plays a part in our new launch playbook. Well, this is the unit mix. So you can see that in this table, the project is actually clearly designed to have own stay buyers in mind, catering to small families or large families. So the major of these units are 2-bedroom types, which makes up to 43% of the development. Following that, the 3-bedroom unit accounts for 35%, and the remaining 22% consists of the larger 4- and 5-bedroom units for bigger families, which is typical for a family-focused development like Pinery Residences. So I think what we want to see here and what is highlighted to us that for the 3-bedroom compact layout, it starts from 807 square feet. So when we compare this size to Parktown Residence, the other integrated development in Tampines, the 3-bedroom compact here is about 120 square feet larger. So the difference actually gives us some insight to how the developer is optimizing unit sizes here and layouts in this project. So we will share more later about the developer's pricing strategy and positioning later in the video, so do continue watching. So here's a map of Pinery Residence. Residents can expect a full suite of condominium facilities, and that include a 50-meter pool, the children's playground, as well as jacuzzi areas and tennis court, or what they call it here, a multi-purpose court. You also have 3 barbecue pits, clubhouse, and dedicated playground for the kids. So I think this is really a full suite of facilities for families in this area. Well, when we zoom out and we take a look at the bigger map, you can see that the blocks are fairly spaced out from one another in the development itself. So units that are internal facing from some distance from one another, right? So you won't be looking at your neighbors directly. And for external facing blocks, you will be surrounded by mostly residential and HDBs. So we expect that the developer could actually price the inner facing unit at a premium due to non-road facing and for it to have also a certain privacy here.
Alright, now let's talk about Pinery Residence estimated pricing. Now, before that, let's talk about the government land sale for this site. So for this site, there were 6 bids, which is a healthy level of interest. It also meets one of the key criteria in our new launch playbook. Now, what's interesting is that there's a narrow gap between the top 2 bids, right? In terms of PSF PPR, it is 1004 or $1,004 for the winning bid versus 985 for the second bid. A good difference of 20 PSF PRR. Now, when the gap is tight, it usually signals that multiple developers have a similar view, right, of what the land is worth and potentially what selling price could support. This also means that the winning bid is justifiable, not aggressive. Before we talk about Pinery Residence estimated pricing, let's talk about developers' 3 main pricing strategy. Now, for the floor premium, higher floors usually price higher because of the view, the airflow, noise, and perceived status. Unit type, and that is similar units tend to have higher PSF, and the rationale is that developers price to hit a palatable total quantum. So you expect that the 2-bedroom units often carry a PSF premium versus the 3-bedder and the 4-bedder. Now, view premium as well, unblock, pool, landmark, greenery, right, and the quiet stacks typically command a premium as well. But this is how developers price a typical unit at a particular level. But what about the entire project itself? Does it command a premium if it is a mixed development? Well, often yes. Mixed developments in Singapore can command a premium, but it is not automatic, right? The premium shows up when it actually creates real daily convenience, your everyday essential triangle, right? Without adding too many livability trade-offs are your noise, too crowded, or design compromises, such as lift zoning, drop-off arrangement, or car park access. Now, and of course, if the retail component is weak, empty, or poorly managed, right, it also stops being an advantage and becomes a drag, right? With that being said, let's look at what the premium could be. So this table shows recent OCR new launches, right? It shows you the land cost, H-prop break-even, average PSF sold at launch, and the markup from the land cost and break-even as a percentage. Now, for instance, the land cost for Springleaf Residence is $905 per square foot per plot ratio or PSF PR in short. According to H-prop, the estimated break-even price is $1,688 PSF PPR. During the launch, the average selling price was $2,175 PSF, right? This means that the selling price is 140% of the land cost and a 29% margin over the break-even price. Now, something caught my attention, and that is Parktown Residence, which is a mixed development as well. Now, so for Parktown Residence, they have a higher markup compared to other launches, right? And the developer priced it that way, which could be because they want to add a premium to it. because it's a mixed development, right? So with the possibility of pricing it at a premium due to mixed development, and with 167 markup on land cost and a 42% markup on break-even, right? What price are we looking at for Pinery Residence? Let's see. Now, all the data shown here can be taken from each prop. So for Pinery Residence, the land cost, as mentioned, is 1,004 PSF PPR, and the estimated break-even here shows 1,823 PSF PPR. Based on the land cost, estimated break-even, and our pricing formula, we estimate the launch price to be between 2,500 and 2,650 PSF. Now, just to be very clear, these are our estimate, not the developer's actual prices. If you like to understand how we derive these numbers, you can download our new launch playbook from our website. Now, this slide, right, shows our estimated price matrix broken down by unit type, size, and price points from 2,500 to 2,650 PSF. Now, this helps us visualize the absolute price range, not just PSF, across the different configuration from 2-bedroom units, the larger 4-bedroom, 5-bedrooms. And this is where the developer pricing strategies may show up. If the developer wants to keep bigger family units digestible, you may see relative PSF moderation on 4-bedroom, 5-bedroom units. So we expect it to be between 2,500 and 2,600 PSF. Now for the smaller 2-bedroom units, we can expect them to be priced between 2,550 to 2,650 PSF. You also expect to see premiums by floor as well as facing. Now, if you want to download this estimated price matrix, reach out to us and we will send it to you. Of course, besides the price matrix, we will also send you the layout as well. Now, but having this estimated price matrix means nothing if you don't put it into context. Let's see whether the estimated price for Pinery Residence in terms of PSF and quantum is reasonable. To do this, we need to compare it with a nearby project. Now, within a 1 kilometer radius of Pinery Residence, there are only 4 projects, right? Among these, Treasures at Tampines serve as a good comparison since it TOP recently. Now, zooming in on its recent 2-bedroom past transaction in the open market, we see an average PSF of 1,716. Now, since Treasures at Tampines is not a harmonized project, we will apply a rough 5% to its PSF to give you a post-harmonized PSF of 1,802. Next, we need to adjust the PSF to reflect its current value after accounting for what we call lease reset, right? This is done by adding $50 per square foot for each year, which brings the estimate PSF for a 2-bedroom unit to $2,202. Now, and we do this the same for its 3-bedroom, which comes up to around 2,232 PSF. Likewise, we apply the same formula for its 4-bedroom to 5-bedroom, which comes up to around 2,230 PSF. Now, you can see that there's a bit of consistency in terms of its PSF for Treasures at Tampines across 2-bedroom to 4-bedroom and 5-bedroom, which is around 2,200 to 2,300 PSF. Again, if you want to learn how to calculate post-harmonization and lease reset, you can always download our new launch playbook. So, with an estimated range of 2,200 to 2,300 PSF for Treasures at Tampines, Pinery Residence feel a bit more premium. But there could be reasons to justify its premium. For example, Treasures at Tampines is not near the MRT as compared to Pinery Residence. It is not integrated, right? So Treasures at Tampines does not enjoy the same daily convenience as compared to Pinery Residence. So perhaps let's compare it to a project that shares similar characteristics, and that is Parktown Residence. Now, to do that, we first take a look at the hard anchor, which is the land cost. Right, Parktown top bid worked out to be 885 PSF PPR in 2023. Pinery top bid worked out to 1,004 PSF PPR in 2024. So that's about 13.6% higher land cost for Pinery than for Parktown. Now, all else equal, it sets up Pinery to be priced higher. Then, the next question will be, how high should it be? Now, let's first take a look at the 2-bedroom for Parktown residents. The average transaction is 2,403 PSF, and if you apply a 13.6% uplift, it works out to be $2,730 PSF. Comparing this figure to Pinery residents of 2-bedroom PSF, the initial premium we thought so becomes very reasonable. Oops. Likewise, if you do that for a 3-bedroom, which is transacting at an average of $2,327 PSF for Parktown, and you apply the same 13.6% uplift, it works out to be 2,640 PSF. Now, comparing this figure to Pinery residents 3-bedroom PSF, it makes Pinery residents PSF across the price matrix very reasonable. Of course, PSF is only one part of the story. We also need to take a look at the total quantum. So for Parktown residents, the 3-bedroom transactions range from about 2.06 million to 2.9 million. For Pinery residents, our estimated range is roughly 2.04 million to 2.8 million. So in other words, we are comparing a quantum range that buyers accepted last year to an estimated quantum range this year, and they sit in a very similar band. Then you do that for 4-bedroom to 5-bedroom, it still shows that Pinery residents, PSF, and total quantum across the price matrix looks quite reasonable.
So these are the 3 reasons why we love Pinery residents. Number 1, we have the HDB upgrader pool here in Tampines. So one point to highlight is the large HDB upgrader pool in the surrounding area. The map that I just showed is actually in the Tampines West area, and as you can see, we have a significant number of HDB flats in this vicinity, and this naturally creates a potential pool of buyers who may look to upgrade to private housing in the future. So for buyers who prefer to stay within the same neighborhood and maintain their current lifestyle, Pinery residents become one of the options they consider when they want to upgrade. So from a market perspective, this means that there are already an existing base of potential demand within the township, particularly from residents who are already familiar with the area and its amenities. Well, the second reason is the proximity to good schools. Like we have mentioned earlier, this Pinery residence is actually near St. Hilda's Primary School and is one of the top schools in Singapore, and being in walking distance, about a 9-minute walk away, makes the development very appealing to families. So families who value school access may consider this location to buy, which should also support long-term demand for this development. And of course, number 3, we love the everyday essentials triangle. One of the key highlights here is that the convenience of having everything around you at your doorstep. So being an integrated development like Pinery Residence, it offers direct access to MRT station, a retail podium, and a wide variety of eateries around the area. It means that this area is highly self-sustaining and you can easily take care of daily needs, dining, and even leisure without having to travel far. So a lot of buyers look at this aspect and it's very realistic for day-to-day living. And it's something that most buyers will look for as well when they are looking for in a home. So the next buyer who is going to buy your place will also purchase it for the same reasons. Right, and 3 reasons why we may not consider Pinery Residence, just to give it a fair view as well. So for first one, for parents, there are other schools that are within 1 km of St. Hilda's as well as Hoi Hup, which is also in Tampines. You can see that there are at Tampines, Santorini, the Tapestry, and Q Bay. Right, so comparisons may not be directly equivalent, right? Because these developments are located further away from MRT station. They often requires buses to go to these MRT stations, and the development is also closer to MRT connectivity and nearby amenities for Pinery residents. Another point to take note that Pinery is a new launch compared to all these developments here. So at the point of completion, only Pinery residents will be one of the longer remaining lease developments in this area. Higher the premium for integrated development, so which Ben have shared earlier. Pinery Residences may be launching from 2,500 onwards, which is a premium compared to other new launches in the OCR area, right? So integrated developments like what Ben mentioned often command a premium due to convenience of having an MRT and amenities within the same development. But a reference point here is Pasir Ris 8, which launched about 4 years ago, close to 2,000 PSF, and it's considered really high for OCR at that time. Despite that, we can see that demand was strong and the project was largely sold during launch day. And based on current resale data, we see that early buyers have already seen annualized gains of 4 to 10% over the past few years. So that said, past performance doesn't equate future performance. So the outcomes may vary depending on your individual circumstances and also the market conditions. And third, what we don't like as well is the high traffic township. So being in Tampines, you know that Tampines is actually one of the most populated townships in Singapore. So it's generally a very busy and well-trafficked area compared to other smaller or more exclusive estates, right? So the environment here feels less quiet, especially around the malls and the town centre during the weekends as well. So that said, Tampines is a mature estate with wide range of amenities, schools and new housing developments, including BTOs and new private residences like this one. So the demographic here suggests that actually many residents who stay in Tampines tend to stay again in Tampines when they move homes. So this may indicate a relatively stable pool of buyers and residents within the township itself. So ultimately, whether the environment appeals to a buyer, that depends on personal preference, particularly those who enjoy the convenience and vibrancy of the busy heartland area. So it's totally up to you.
Now, that is all for Pinery Residences. Now, before you go, if this breakdown was useful, do help us like this video and subscribe to our YouTube channel so you don't miss our next new launch analysis. Now, you can follow our social for quick updates, bite-sized insights, and even launch day highlights. If you want the full Pinery Residences pricing matrix, plus the layouts and all the details, just reach out to us. We will send you everything and walk you through what matters. Now, if you're serious about evaluating new launches consistently, do download our new launch playbook. It's the framework we use to analyze pricing, stacks, and value across project. So once again, thank you so much for watching, and we will see you in the next video.